Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. Today, I'm absolutely delighted. I've been waiting for this one for a little while. It is my great pleasure to introduce you to Steven Petersen from Stavtar. Steve, how are you?
I'm great. Thank you for taking the time. This is awesome.
No, likewise. We've had a little bit of a preamble beforehand, so I've been spoilt with the story, and it's a great story to tell. I'm also sort of looking very jealously. It looks like a very sunny New York City behind you there. Only a couple of weeks ago, I was there and looking out on that view. I've got a picture of it on my phone. I sneakily took one. It's a great view, a great office, and a great story we're about to tell on it as well. So, Steve, let's start with the intros. Give us a little bit of background about yourself and the company, if you would.
Sure. Yeah. Thanks so much. So I'm Steve Petersen. I'm co-founder of Stavtar Solutions. My background's accounting. I started at Arthur Andersen, quickly went to JP Morgan in a proprietary trading desk, basically an internal hedge fund of JP Morgan. I was there for 8 years, had some great mentors there. And really what I learned most, a mentor named Rich Mazzella is, he said, listen, build out processes, with people in Excel, but then go and sit with technology and automate, yourself out of that role. And that's what I always actually enjoyed most about my roles was building processes and then automating them. I was there for 8 years. We were a business. We started with 10 people. We grew to about 150 or so. We ended up managing $50 billion of JP Morgan's balance sheet in a multi-strat fund. Really great opportunity for me young in my career to learn. And then I left in 2005 to join TPG Axon at Startup. We were a partnership between Texas Pacific Group, the large private equity firm, and Dinakar Singh, who ran principal strategies at Goldman Sachs. We started with $3 billion of capital. We grew rather quickly to about 16 or so at the peak in '08. And that's where I met my partner. So my partner's name is Avtar. So Steve and Avtar make Stavtar. We're not very creative with names, but we thought it sounded like
I love it.
Thanks. We thought it sounded like a planet or a universe. And, we wanted to build a universe of software for complex businesses to live in. So that was kind of the idea. We thought it went well. My 12-year-old son at the time, I think, came up with it. And we were like, oh,
really? Is that where it came from?
Yeah. It's pretty good. So then, after I was at TPG, I started as global controller, then promoted to CFO a few years later. And just like, any other startup, you started with the people in Excel and then went and sat with technology. And Avtar was global head of application development. And, we built, a rather robust, a bunch of software that, really a platform that could really manage, every task that we had. And Dinakar was a great man to work for. Basically, never really focused too much on budget, but was more about, his line was build me the best infrastructure in the world. So, we were lucky enough to be in that environment and, be allowed to make some mistakes but build really robust approaches that allowed us to automate a lot of the processes and be able to scale. I left in 2014 to become CFO of Hudson Bay Capital. Hudson Bay is now a $20 billion multi-strat, multi-PM model fund. At the time, we were $2 billion. And the first, 8 years or so of their existence, they had outsourced their entire back office to their administrator. So they wanted someone to come in and build out an infrastructure. So it felt, very startup-like, even though they were, they had a really strong engine already working, which was fun. And one of the things, my boss said to me on day one was, Steve, I don't have one place where I can go and see what it takes to run this business across the enterprise. And, I first said, don't beat yourself up. That's pretty typical across most funds. And we're bifurcated between the fund side of the business and the management company, separate teams, separate general ledgers. But most importantly, we're way too complex to fit into any of these systems. So, you end up doing a lot of pre and post processing around these systems in Excel with people. I said, but it doesn't have to be like that. I said, what we can do is build a software that sits above all other technology that we use, that will capture, house, and manage our vendors, our contracts, and our invoices, and then give us the ability to allocate those invoices in unlimited ways, unlimited layers, based on any attribute. So allocate an expense based on net asset value or committed capital or cost of a deal or time spent, and go not just to legal entity, but also down to strategy, to deal, to department, to user. So really slice and dice a dollar so you really understand where you're spending your money and what was the ROI on each one of those dollars spent. And then after it does the math for you, have it go through workflows for approval. So your accounting team, your ops team, your treasury team, your legal team, your office manager. And after they've approved it, have it then integrate downstream into your general ledgers, banks, wire platforms, fund administrators, soft dollar providers, any relevant third party to you. I said what it will do is it will institutionalize our process immediately. It will digitize all of our data. It will give us that ability to slice and dice the dollar spent in all different ways. And it will give us robust and dynamic reporting from the highest to lowest level of detail in seconds and in real time. He loved it. His eyes lit up. He's like, that's great. We're building that. That's awesome. And then me, being in a world that never really does even discuss budget, I didn't even think about, any kind of sensitivity around that. So I came back to him a few weeks later and I gave him a project plan and I gave him, a timeline and I gave him pricing at the end. And he looked at me like I had three heads, and for good reason. I get it. He wasn't used to that. And he said, listen, there's no way I'm spending this kind of money on this. And my retort was, I was like, well, listen, actually you will. I said, I guarantee you will spend this kind of money on this, and we're going to spend it every year. Because if we grow how we want to grow and we get as complicated as we're going to be, I said, we're going to spend this kind of money every year on 10 people on this team. And, we spend a lot of time, energy, and money, allocating expenses, booking general ledger entries and wires. And all we typically get out of that is a paid bill. This allows you to not spend any time on that. You are only applying judgment to the process. You are approve or reject, and there's no data entry. However, you get insights into your business and you're spending like never before. So it's a huge thing. So I pitched it to him. He didn't get it. I thank God every morning he didn't get it, because what it prompted me to do is, go out to the street and talk to.
Best failed pitch ever, right?
Yeah, exactly. I'd go out to the street and talk to, I think it was around 9 or 10 CFO friends that I had. And I said, listen, tell me about your process. We built things like this in prior worlds. And, what are the systems that you're using? Tell me about, what you do. And, they told me really bad stories. And it also struck me that it didn't seem like a bad story to them. And I just said, this is not how we should be doing this in these, really, amazing organizations with incredibly intelligent people and phenomenal technology teams. We should build this for the industry and really, get this low-hanging fruit away from us. So I called Stavtar and I said, hey, buddy, let's get the band back together. What are you doing? And he said, well, the band is together. He said, I left a year after you did, but I took 25 guys with me with Dinniker's blessing. And he started a FinTech company. He was building reconciliation systems and risk systems. And, I pitched this idea to him and he was like, oh my God, yeah, that's a great idea. He had, 9 other ideas on his own as well, which we were just riffing and it was really going well. And I said, okay, let me go back to my boss. And so I said, listen, I will build it, we'll fund it. Hudson Bay, we can use it for free. But ultimately, I need an outside business interest approval so I can sell it to some of these other funds I've talked to and recoup my cost. So that was the plan, and that's how we started this. And so he said yes to that. We developed the product in 2018. We launched the first version on January 1st, 2019 with 3 funds, including mine. And then we continued the next few years to develop the product across the roadmap we had laid out. It got better and better. We ended up adding about 9 or 10 managers to the platform by late 2021, and that's when I decided to resign and focus my full time on this. I transitioned through the audit of April 30th, 22, and then I've been doing this ever since. Since then we've grown about 1,400%. We have, I think, 125 or so managers on the platform now, close to 2.5 trillion of AUM. We have a $1 trillion platform that you've definitely heard of, a $150 million fund that you've never heard of, and everything in between. And typically, if people like to break down by AUM, typically if you break it down 0 to 5 billion, 5 to 10 billion, 10 to 20, 20 and up, it's pretty much about 25% each. So, really runs the gamut across size. And, I started with a lot of hedge funds just because those were the names I knew to reach out to based on being in hedge funds for 20 years. But ultimately then a couple of years in, we connected with a couple consulting firms that had a lot of inroads into private equity, and they introduced us to a lot of private equity. So as of today, I think we're about 55 hedge, 45 PE. We also have some big family offices as well. That's great to have. And really, the product is really relevant to anyone that pays bills and allocates expenses, which is every corporation in the world, honestly.
Yeah, it's not a bad
However,
target market, is it?
yeah, but we've decided to, for now, stay focused on alternatives.
Right.
One, we grew up in that world. We understand, a lot of the pain points, and we like to continue to develop products around that. So we'll talk today about StavPay, which is the core product, but also something called StavOrg and StavComp, and we'll get into that in a little bit, is my guess. But yeah, so that's kind of where we are today from as an organization. We've been cash flow positive since 2020. We've allowed the business to organically grow internally. We took our first outside capital, a small raise in 2024, and then we took our first real institutional money this past summer. We did a $55 million minority investment from Elephant Partners, who we're just elated to have join us on the board, and they're just they seem to really understand how to support a business, but without the idea of like, hey, we want to take over, which was something that we really were excited about, and I think they saw what we have here and our growth trajectory. So let me know if there's anything specific.
That's where you are. I mean, there's so much to unpack on that. You might have seen my face as you were talking. I love the energy of that. I love the story of it. I love the whole tale of it all is brilliant. And I think, as I said, there's 600 videos on our page plus at the moment in terms of people we've been speaking to over the last few years. And actually, this outside interest is the first time I've actually seen one of the companies who had that sort of origin story. And I think it's fascinating. I think it's fascinating that they sort of went through that and allowed that to happen. I think it's fascinating as to how it went through. So I want to touch into that. I want to talk about the decision making that goes from someone there who's been in but albeit in growth areas, and there's some phenomenal growth that you've been through in various different companies, but also some pretty household names there. And to go in there and build this out and to do it and take that sort of leap is, especially when you're talking about self-funded businesses at that sort of stage and not having raised till 2024, 6 years later, having started, that's a phenomenal change in a background of someone who is effectively a first-time entrepreneur in that sort of circumstance. I'm also fascinated by the sort of origin story of the people. I see CEOs who've come from and founders who've come from all sorts of different backgrounds, and the CFO one, and actually that sort of combination of CFO and technologists that you guys have together there is a really interesting background as well. So when you're doing that, and both of you coming into that sort of thing from an institutional background and saying, right, this is where we want to go, and having that sort of excitement almost of solving a problem that you felt and had the pain of, and then being that passionate about building and going out there and doing that. Tell me about that sort of thought process of where you've been sat there. I know you've got a family of multiple children as well, and all that sort of thing as well. There's pressure that surrounds that sort of thing at any sort of stage of a career. So when it got to that sort of thing, I think you mentioned 2022 is when you left. 2018 is when you started it all off, etc. What gave you the confidence to say, actually, this is where I need to be now, and this is why I've got to leave something there, which must have been difficult to leave at the same sort of stage, but also then the draw of doing something like this, I can understand where it comes from. There's a lot of risk that's involved around that. What allowed you to say this is my journey now?
Yeah, no, great question. And I remember, you talked about my family. I have 4 children, as you know, and I remember sitting around a table, that summer of 21, and first talking about that conversation. And I remember my son, who was getting ready to go through the process of his college path, and he said, "Dad, is this okay?" And
this is a wise kid. This is a wise kid you've got there,
right?
Isn't it?
Right. He totally knew, and so it was a big question, and at that point, I did feel a bit confident. I knew what I had in my partner, but I think it goes back to you alluded to. I was really lucky to have been part of so many businesses that started small and grew big, and saw the success. And sometimes you can be clouded by success and not realize some of that risk that's truly there, because you always say, oh, things are going to work out, and I think that's part of it. And I think then that ability to kind of see how you scale, right? So your business is different at each stage. Where you've got the small family early, and everybody's wearing a lot of hats, and then you have to scale and silo people and get people comfortable with not doing as much, but also doing the things that matter most to them. But I also think it's also from growing up in the hedge fund private equity space. I think the people that come in there and succeed in these businesses are entrepreneurial at heart. I always felt like Dinnaker did an amazing job of like making me feel like it was my business. And I try to do the same thing with everybody that we're hiring now. Is like, this is our business. And I think that entrepreneurial spirit, that ability to, to quench the thirst of, I want to build something. And I think, I was able to do that at TPG, at JP Morgan as in a more of a junior role, and then TPG a little bit more senior. And then Hudson Bay gave me that, amazing opportunity to go out and try this while I still had a job, and was still, and still had a little bit of that safety blanket for the first few years. So that was huge to me. And it always, no one, it's never just about you. It's obviously, it's your entire, network and family and all of these people that were part of it. And I'm so grateful for so many of them. And of course, remiss not to mention Avtar. I also, knew how unbelievably talented Stavtar and our team is. And so it was a known quantity when we started this of, that I was just, I always say my first sale was talking Stavtar into doing this with me. And I think that's, something that really helped kind of take that leap. So yeah, I'm not going to say it was always with no fear. And I also have a strong faith, and I feel, that's, always felt a bit guided, and certain things kind of fell into place as well, for certain things, like for example, I remember in late 21, after I had just made this decision, and a friend of mine calls from a very large multi-trillion-dollar organization, and he said, Steve, you wouldn't believe it, but I just got promoted, and guess what I own now? I own all of expense management for the alternatives business at the very large organization that everybody knows about. What a great opportunity for me to have conversations there and hopefully get some business there. So things like that all kind of fall into place. I always just say, work hard and good things happen. And we've been lucky enough to do that.
I love that. I love the whole concept of serendipity in business is an important part of it. But I think it only works if you actually got something compelling and you've got the absolute belief in where it's heading at the same sort of stage as well. I just want to roll into something you mentioned there, where you talked about your first sale there, and going back to that piece, which I talk about the sort of various backgrounds of successful founders within this space. You obviously come from a CFO background. Sales isn't necessarily the number one priority of a CFO at various different stages, but obviously then taking this business and you've recorded some phenomenal growth, as you highlighted when you were giving your preamble there. How's that transition been from institutional CFO through to a CEO who's wearing numerous different hats, from product design, as you've been talking about, alongside the tech piece, through to, I imagine, the CFO piece has been a hat that you've been wearing at various different stages as well, through to then the whole building and presenting and networking and being the brand at the same sort of stage when you're talking about those sort of things, working in network, doing the sales piece of it. You feel, to me, and I've only met you a couple of times now, but you feel someone who's very naturally suited to that sort of space. Is it something that came naturally to you, or?
Yeah, it's funny. I probably wasn't the typical CFO in terms of personality that I had my friends around, but I always
didn't want to say it.
But the yin and the yang, I always got along with all of my CFO, the other CFOs that I knew. What I always say is, every successful person in every role in every organization, you'll see, a very standard, quality that they have. And I think if you don't have influence skills, you don't drive change and you don't lead. And I think, the key, whether you have an outgoing personality, whether you have, a more of an introverted, I think the people that can see, what they want to accomplish and then have the influence skills to, get buy-in across their organization, to be able to go and build something, or to create a process or change a process. I think, that's a skill. That's what sales is to me, is truly just being able to have a view, have a path, and then have a compelling argument of why that's the right approach and why we should do that. And I think that's sales to me. I don't think, it was funny. I do remember when I was at TPG, and we had a couple colleagues come over from our Luxembourg office, and we were just talking about something, and the woman in a bit broken English said to me, she goes, you're like a car salesman. And I think she meant like I sell We can edit this out. But she was like,
I'm not taking this out. It's too good. Keep it going.
She meant it as a compliment. I think she missed the car part. I was like, but she meant like you're a natural salesman, or something like that. Like you talk people into things. And for me, it's not talking people into it. It's if you build the right product. And I think we've, luckily we know the problem, we've solved the problem. And it's a problem that just no one else cared to go and solve at the level of what we've done. I always say, when I went to the landscape of products and I saw all the business, there's a lot of business spend management systems out there. And I truly believe we are the best one. And it's because we can handle the complexity. We do the whole job. And, a lot of business spend management systems are built, and it's a great business model. They're built to do the basic 30-40%. That's the easy stuff, but you need some component of workflow. And I think, we've been lucky enough to be able to handle a lot of that complexity, which is just something that's needed. So I don't necessarily know if I'm a great salesman. It's more of the product we're selling is something that's really needed. And I think, Avtar and team have done a great job of executing on the plan.
As you're talking through that, there is a book that's just actually sat here over my shoulder, which is one of my favorite books, which I refer to a lot, which is called To Sell Is Human by a guy called Dan Pink. So Dan Pink, I think, is an exceptional author. And within this, he says the whole premise of the book is everyone's in sales now, and it's the move from seller beware to buyer beware to seller beware, and the whole the natural evolution of people and their aware, how aware they are through digitalization about much more knowledge in terms of the sale piece that happens. So that credibility and the fact that you've been sat there and felt the problem and then can speak so passionately about it, I think becomes actually what a salesperson is now. It isn't necessarily that person who's going to sit there in wine bars and smooth talk people and do all that sort of stuff. It's, I understand this problem, I've got credibility, this is why you need to have it, and this is how it's going to change your world. If you can put a little bit of razzle dazzle and car sales into it alongside that, Steve, you're absolutely flying.
Not going to get to edit that out, I guess.
Huh? Not now. So I want to. There's loads I want to dive into alongside this as well. But one of those things is this sort of turbo growth that you've seen in every organization through the CV so far, so to speak. But specifically here, you've spoken about a business there that had been bootstrapped to an extent, that come through as a side hustle to as the trendy word fits now. But as that moves into it all, and you've seen that sort of growth, you'll sit there and say, right, here's a constant theme in that sort of thing. You've spoken about your sort of belief and faith and everything else that is in there beforehand. But if you're to put ingredients into what's allowed the business to move at that sort of trajectory, and that you've seen from the other environments, from JP Morgan to to everywhere else that you've spoken about beforehand as well, tell me what's allowed and afforded that to happen for you.
Yeah, no, I mean, let's see, having a good idea, a strong understanding, of the problem that you're solving and the ability to solve it, and understanding the client. I think there's no one out there better than us, that we understand, the business, and we understand our client and what they're dealing with. And I think, from growing a business, it all starts with, the people and the talent, and then from building those at different levels, and we're going through the growth mode now, and now taking the outside capital to allow us to scale. We started very bootstrap, where me, Avtar, and a small team working on this, and then took our first employee in the US in 2022, and then have grown that team out to now 150 globally, and we're in New York, Dallas, London, Bangalore, and Mumbai, by the way. But ultimately, that rotation and that change as well, where you have to assess people and their ability to kind of get to the next level, and more about, everyone loves wearing, people that love startups love that startup mode. And I say a few things, and because you're wearing a lot of hats, you're doing a lot of different things. And then there's this tension component as you're growing, because it's like, okay, everything's changing, and you're always going to think, oh, the beginning was so beautiful, we were all together in a room and all that. And it's true, there's aspects of that, but you also have to see where the beauty's coming from going forward. And I think kind of getting buy-in from everybody in terms of, okay, this is what the business is going to look like now. And as we're in here, we're saying, okay, where do we want the business to be? We're hiring for that. And I say a lot, the term I've been using is, I want more adults in the room. We built a business with most escalation points were coming up to me and Avtar, and we just can't do that anymore. As we look at strategy and growth area of where we want to go, we have to be in different conversations. So, building out a team now of excellent professionals, it's great that we've had the experience to have seen that and build and a great network of strong. So, for example, we just hired as a CFO that comes from my old days of JP Morgan. She was actually a portfolio manager for 15, 20 years.
All right.
Super smart, amazing person and professional. And then made a shift about 5 or 6 years ago and went to, what I call the dark side. They were running a business and in FinTech and took that to sale as a CFO, COO. So just unbelievable experience, but also thought process and thinking. And, like I said, we were lucky to be in that business at JP Morgan, of surrounded by such unbelievable
incubation.
people.
Yeah.
And so then having that kind of same framework, and so now we're able to bring all of those pieces together. So the open roles, CFO, COO is now kind of taken care of. Head of client success is next. We've got a head of payments, which is an area that we can get into if we get more into the product as we go through this conversation. But so really just building in all of the senior people. Then of course on the development side of building in the senior managers around technology support, things like that. So so I think like I said, I think it's you obviously have to have a good plan and a good product, and then it's just a matter of bringing the right people together with that entrepreneurial spirit, who want to run through walls and build something that's going to last longer than them. And I think that's what we have here.
I think that's a classic ingredient, and that's the sort of ingredients actually that sort of attracts that investment at the same sort of stage as well. And when what I loved about what you were talking about there about taking the money on is it probably wasn't necessarily needed. It's not like you come from a position where you have to, you're running out of runway, et cetera, et cetera. It means you can make the right decisions onto it. And I see so many failure points of investment when it comes through from misalignment between the investor and the company there about where they both want to go, and one getting more involved than the other one wants, and it all becomes very difficult. It sounds like it's an absolutely brilliant piece around that. You mentioned it there, and I think it's the right time to move on to it, which is the product itself. And I know you've got 9 different streams of it, a whole load of vision about where it can go. As you spoke about, there is a huge addressable marketplace, and I know the alternatives is where the strength position lies. But give us that view of how you've built the product and what you guys are doing and where you can add value.
Yeah, no, thank you. So as I mentioned, the core of the product is managing vendors, contracts, invoices all in one place, and giving you the ability to allocate those expenses in unlimited ways with robust workflows, ability with thresholding, et cetera, and then integrate downstream into general ledgers, banks, wire platforms, fund administrators, et cetera. So we've since built 9 different modules to help in all different areas of pain. So one being accruals. So not managing accruals in Excel anymore, but if you have a new expense, a new product, and you need to accrue that over the next 12, 18 months, right within the system, it will create the accrual schedule. It will book the accruals to your general ledger. It will release those accruals as you pay your bills, all automatically. We added a budget module where, imagine not waiting for a end of a month report from some controller in Excel to say this is where we are in our business, but having real-time budget to actual reporting. So set up your budget, and then as you allocate expenses, it automatically applies against those budget codes, giving you real-time budget to actuals. Have the real-time budget to actual right in the invoice screen as you're approving the invoice to see, does this put me over? Where am I right now? So things like that. Legal module, we have the ability of all legal bills automatically populate within the system. We can manage legal matters right within the system. So it automatically chooses allocation methods, and we give the in-house lawyers of our clients a interface before it even gets into the system for us to review, and our clients, our controllers and CFOs to review as well. Something we call the chargeback module, which is the most popular module that we have. Most of our clients, have a ton of legal entities. And they're usually paying on behalf of all of those entities out of one of them, typically the management company. So then there's a whole process after you've paid this bill to now go and get paid back from all of those funds. So we built what we call the chargeback module. It's essentially as you pay your bills and allocates expenses, StavPay is tracking who owes who what. And within the chargeback module, with one button, it essentially creates an invoice, and you are now the vendor, and you are actually, sending out an invoice to each one of those legal entity workflows. So automatically, getting your reimbursement back. We have a services module. Many of our clients will have a lot of market data, for example, or maybe we'll take Bloomberg as an example. Bloomberg, typically, they're giving you a ton of different things. Terminals, yes, but also exchanges, entitlements, all different types of things that maybe every user in your business is using it differently. And then that is really complicated billing and an understanding of the tracking. So everyone's typically, they probably have a technology person that's inventorying that in Excel. Why isn't that in a system that's also talking to your invoices and your vendors and your contracts? So we built a services module that allows you to inventory all of the services a particular vendor is giving you, track that, give ownership to it, which will drive allocation when those bills come in. So that comes along with the core product. That's not an add-on. We have a 1099 module. So for vendors, tax reporting in the US, it's kind of like a W-2 would be for an employee. A 1099 is saying, listen, this is what we paid you this year. So that's a requirement that's every year in January. You can not only produce 1099s in StaffPay, but we also electronically file them automatically with the IRS. We get messages back right within the system from the IRS directly in the system. So again, the universe of software for you to live in. Don't have to leave and do all of these things. Time tracking module. As we got into private equity, it became very apparent that private equity firms track their time and in terms of what they're doing, in terms of who am I working on, what portfolio company am I working for? Because a lot of times either they're tracking it just to understand ROI or they're actually invoicing down to their portfolio management companies. Well, we built a time tracking module where you can track all of the time spent across your organization, and that can drive invoicing down to portfolio companies as well. So that's become a rather popular module in the private equity space. And then a procurement module. We had a couple of clients that said, listen, you're approving invoices that are already being invoiced. I'd like to approve this up front before I actually pay. Obviously, nothing earth-shattering here. So we created a procurement module that would also allow for that. And then it will track and connect with the invoice. And then payment center. So this was a big tectonic shift for us. So when we started, it came from risk-based, but also I didn't, I was in, as a CFO of large funds, I was in meetings with investors every week. And one of the number one questions they'd say, hey, tell me about your cash controls. And, so when we were talking about cash and wiring and all this stuff, how I pitch this to clients is like, listen, we're not going to change your workflow. But what we'll do is we will, ensure that getting information downstream into your banks or your wire platforms is not a manual process anymore. So we've integrated into, multiple, for fund admins, wire systems, and directly into banks like JP Morgan, Bank of America, over 100 banks of integrations. And then a few years went by and a couple of clients were saying, listen, I love it within StaffPay. Why do I have to leave and go to 9 different banks to send my payments out? And, I never anticipated they would want to, say, hey, this guy, Steven Stavtar, take care of my payments. Don't worry about it. But, a few years in, you go to SOC 1, SOC 2, you're a real business. So it's good. And I said, you know what? That makes a ton of sense. We should build an ability to wire ACH all directly from the system. So we did that. We called it the Payment Center. We published that this past January. And what's great is that the industry is changing as well as there, and I'm going to get a little geeky here, so sorry, but there's new formats with banking of sending messages and receiving messages back called ISO 2022. And that standardized format is required for banks to support by November this month. And it's really allowed us to have, yes, that standardized integration, but also to receive back balances and transaction data from the banks as well. So now within Payment Center, not only can you do the wire and the ACH, but you can also see your balances and your transactions. So really becoming like a de facto treasury system, all within your vendor contract invoice. So we're super excited about that, and we love where that's going. And we anticipate now building more treasury-like components like projections and things of that nature. But additionally, we're rolling out, we're going to have a credit card offering. So we've integrated to multiple companies like Concur, Ramp, Brex, Amex. We have the ability, everybody uses one of those. And what we wanted to do is say, okay, listen, you could still use all of those systems. That's fine. Just have a feed of that data into StaffPay. This is where we'll do the hard stuff. We'll allocate, we'll approve, we'll book into your general ledger and all of that. But then we said, well, why aren't we, let's go look at these offerings out there. Why aren't we offering our own credit card with our software? So we did that. We're in the process of finalizing partners with that. We expect to roll out our first credit card offering April 1st of 2026. And that will really allow a couple things to happen. One, T&E all in one place, one provider with all different, all the data. So not relying on the integrations anymore. But and you'll have virtual cards, physical cards, controls, et cetera, an app, all of those things, which will be great. But what's really enticing and exciting is we have about $10 billion of payments being processed through StavPay currently. What you can do is apply virtual card rails to that AP payment center as well. And if we can get and estimates from partners with vendor networks, look at our vendors and say, we think we can get up to 30% adoption. But if we can get, let's say 20% of adoption, what that means is, okay, now I can pay those vendors with a credit card, and then we get exchange from that card. And then we could share that with clients, right? So, making the product, we give credits to the cost of the product and maybe even becoming a revenue center for clients. So we're super excited about that. That's where a lot of, the growth can come in terms of, process savings, but also even, becoming even more efficient in terms of cost of the product as well.
I've listened to that, and I just love I love two things. I love the energy about it first and foremost. It's just, you can just smell the passion that sort of comes out of you about where this has gone in the journey of what you're doing, and how it's just like a constant whir of innovative thinking about what happens and where it can go. And I find it really fascinating, because we're in a world at the moment where people are talking about sort of specialization and niche and really doubling down. And you've got this thing here where you can say, right, this can go so many different ways in terms of how you build it and develop it. There's obviously a constant worrying of how can we improve it, how can we iterate, how can we keep on building this sort of play. You've been disciplined about, as we say, the alternative space and where you're sat at the moment. But obviously there's this universal opportunity of taking it all over the world into pretty much every business that spends money, I guess, in one way, shape, or form. So tell me about how you discipline yourselves to make sure that those products are as relevant as when you first set up that business and said, I've got this pain point, I need to do that. Because there's almost that sort of desire to keep on building into various different areas when you can see about how many different areas it can come into. It feels like you're absolutely getting that bit right, whilst you're on the precipice of this huge temptation to be all things to all people at the same sort of stage. Where does that come into the thought process, Steve?
Yeah, no, another great question. I think, listen, I think we've stayed focused in the world that we know. We know there's a lot of those pain points. And the way we look at it, if we build it for the most complex, and what's great is, we have incredible 125 of the best managers in the world, right? Really smart clients that also give us ideas and work with us and partner with us. I don't like to be called a vendor. I always say we're a partner, and and that's a component of kind of staying focused there, because you're building for the most complex, and every client has made us better in some way. Every new requirement, like chargeback, like the chargeback module, that came from a client saying, what really stinks? This. And I'm like, oh, that's right, I remember that. Yes, we should do that. And then they work toward it. Staff Comp is a new product that we're rolling out, and it's about compensation. And we have a very complex business in London that's a pass-through model, and which means they need to accrue compensation expense to their funds, and they have to track all of that. And compensation, as most of our businesses will know, is it's not just about payroll. It's actually a really complicated business. You've got base pay, you've got bonuses, incentive comp, discretionary bonuses, you've got deferrals, you've got clawbacks on those deferrals, perhaps. You've got to value those deferrals over time, and what ends up happening is you're doing a lot of that work in Excel. It's a very similar theme. You do a lot of that work in Excel with people, and then there's only a couple people that can see comp. So you're at the end of a year when everyone else is going off the holiday, and you're there building comp letters manually, and you're doing quarterly deferral statements manually. And we said, well, yeah, why is that all in Excel? Why don't we build a database where you can track all that? And it's the same theme. Everyone's different, so it has to be incredibly customizable and flexible to handle a lot of different things. But that's kind of where we excel. So so there's a little bit of creep there getting into another product, but again, that product, while we're building for the most complex, is going to be relevant to almost everybody else. So it's more about being patient in terms of, let's stay within this lane of alternative asset managers for now, and then the way I look at it going outside it's not that we can't do it. It's just you have to be ready to do it. And now we took a little outside capital so we can start building teams that can do that. But what I want, what I said earlier is I think one of our biggest strengths is we are our client, right? We know exactly where they sit. So if I'm rolling into a new industry like oil and gas or healthcare, I'm going to want equivalent of me in those seats to really understand that. So we have to build out the team to do that. So that keeps us a bit disciplined as well until we get those pieces in place to be able to do that. But this credit card, this really gives us an opportunity to do a lot of different things, right? So it's going to be almost a whole nother product on its own, not even while we're building it for our clients to have a one holistic place to go. There might be clients out there that are, just they only need the credit card and they're not a complex business, but they want the card. So we're going to figure that out in terms of that TAM widening and the team widening to handle it. And how do you market differently in that regard? Where do you target? So again, it's fun for us to learn how to do that. And we hope that, we'll bring in the appropriate people that can kind of help us there. That was another reason, why, yeah, you're right. We didn't need the money, but a lot of their pitch from the PE firms, the VC firms, they come in and they say, listen, we understand you don't need your money. But we think we can add value, in a different way, not just money. And here's our plan. And here's our thoughts. And so we were incredibly impressed with those. We got to meet 30 different firms and a lot of really smart people and narrowed it down and got to a place that we really love. So from a discipline standpoint, I just think we never feel like, I think discipline comes from like, you feel, you got FOMO, you feel like you're missing out over here and over there. And we think we're very confident in our product and we understand we don't really have FOMO because every time we get another alternative asset manager, we're building something that's going to be better for the world in terms of business spend. So we know there will be a time when we do that. And this just allows us to continue to drive the product in another way. One more thing, building community is really important to us. So, I've been in peer groups for CFOs across alternatives for years and years. And everyone sets email. It's all based on email for the most part, and you kind of get together here and there. And you send out an email, hey, who's everybody using for background checks or something like that? And I said, well, listen, we have a ton of data, right? We have 125 firms and $10 billion of payments, and we have 16,000 unique vendors in the system. And we know who's everybody's using for everything. And so how do we kind of build that within our product and into a community? So we started with something called Stav Market, which it actually kind of starts it's kind of becoming the Amazon of alternative asset managers, where you can kind of go into StavPay, not only manage your vendors, contracts, invoices, but I can also go to a marketplace and actually see all of the vendors that are out there and get details of their product before I, going to have some annoying salesperson call me. I can kind of review and see that. And how we're pitching it to vendors is like, listen, we're going to charge you to get onto the platform to have basically like a Facebook page on StavPay, but also we're going to curate in introductions and smaller, events and dinners together and people that are interested in you. So I really kind of want this to be a peer group. So, kind of breaking it down from the discipline standpoint, making sure you're building a community that's robust enough to feel the holistic universe of software, right? And have that community all connected and then go to the next industry and the next industry and do the same thing. So that discipline is just part of our core strategy of how we want, we build StavPay because this is what we wanted, from when I was in that seat. And I think that's helpful. And I don't feel like we're missing out on not doing those verticals yet, but they'll be coming for sure.
Another of my favorite books sort of springs to mind as you were talking about that. And I think actually, if I'm not mistaken, it's there at the offices are right behind you. Is that Salesforce opposite you?
That is Salesforce.
Yes. Yeah. So Mark Benioff's book Beyond the Cloud is a classic thing there of building those communities and starting off from a small bunch of users and would-be people they're coming in and going from 10 people in a room turning out to swelling the population of San Francisco by 40% with Dreamforce when it comes together. So you're in the shadows of
it's a constant reminder. It's funny.
Exactly, of just where this whole thing can go, right?
It's a great model. I do love it. And I'll tell you that I'm trying to get there. I'm like a weatherman. But yeah, this little Salesforce thing here. I asked the building we're in now, I said, hey, can we get naming rights of this? And he was like, get out of here. And he's a nice guy. I love him actually. But ultimately, if I lower these shades, and I'll send you a picture, and this might not make the interview, but there's Bryant Park out there, and
I know,
the New York Library, and when I lower the shades, on every shade is a letter, and it's STAVTAR. So when you're out at Bryant Park, you actually look up and it's as if we have naming rights. And it's like,
Love
okay,
it.
Salesforce, we've got Stavtar. So
I love that. So we had a similar thing when we moved to a small office above Waterloo when we were about 2 years old as a company, and there was a tube strike opposite, and we printed out these things and basically stuck them on the windows at that stage on A4 paper. Not quite as glamorous as you, not quite as glamorous as Salesforce, but we're on the journey.
That's right. That's right. That's the fun part.
You spoke there a little bit about discipline, and my discipline has been horrible in keeping this to timing in terms of where it went. But I couldn't stop it. It's been an absolutely fantastic conversation, and when sometimes you just got to lose discipline and embrace the whole conversation. So I've absolutely loved it. Let's finish off with just a brief snippet of what we can expect to see from Stavtar Solutions over the course of 2026. What you've mentioned so much there, but what's really getting you excited, and what should people be thinking about when they think about the year ahead?
Yeah, no, we're just super excited to, continue to scale the business. And I think, this treasury payment area and the credit card is just so exciting. It's not just credit card, also stable coin, and thinking through of, really there's a lot of exciting, developments coming around in payments, and we're excited to be part of that. And I know, the buzzwords are always AI. Everybody's excited about AI. We obviously have AI throughout our product, whether it be in the OCR side, but also, the chat bots within our contracts. You can all ask questions, and kind of we give summary prompts where you can kind of like the risk factors of a contract, and all those things are also getting better and better. And we're super excited about, some of the areas of AI, how not only does it, we look at AI as we want to be distributors of it, right? So, a lot of clients kind of look and go, how do I bring AI into my business? I think, we should bring it into from products like ours that are using it, right? And turning your process into a proof reject. So I think those areas are the biggest excitement for me in 26 is, continuing to scale the team and bring out incredible professionals within our business to allow us to do that. Credit cards and payments and stable coin all within the system, and continuing to, drive AI and be a distributor of AI within the product.
Do you know what? I've recorded nearly 100 episodes of FinTech Focus TV this year, and I don't think one of them has had AI not involved in the conversation. And we got all the way through, and it came in at the end. And do you know what I love about that is the fact that it's just so natural to what you're talking about. So there's a lot of people, I think, that are pretending to sort of be AI native, AI driven companies, but everything you've been talking about has been making it efficient. So I often think about what's the value of a business when they come, when they're presenting. And I was, moving between productivity and efficiency between when you were talking there, and friction reduction and everything else that's involved in there. And I think it's a collision of all three of those things in terms of what you're doing. And when you're seeing the growth that you've got, when you're seeing the investment you've been able to gain, when you're seeing what the story of what's happened so far, I think it's just a fantastic story. I was excited about it when Ganesh introduced us for the first time. When I started reading up about the company, when I started doing it, I'm even more excited now. This has been a fantastic episode. I'm so grateful for you to coming on and sharing the story. And I wish you nothing but the absolute huge success, as I'm sure it's going to continue to be. So, Steve, thanks for joining us on the show. If people are listening to this, want to find out more, want to get involved, what's the best way for them to reach out and get in touch with you guys?
Stavtar.com is great, and bd@stavtar.com is phenomenal. Thank you.
Well, there you go. You've heard it first. Steve, an absolute pleasure. Thanks for coming on the show. Thank you all for watching. We will see you soon on another episode of FinTech Focus TV. Thanks a lot.
Thank you, everyone.